Okay, so we are ready to cover chapter 17. So the plan is this week we will do examples and kind of short explanation on chapter 17 like we've been doing. And then next week it'll really be a time if you guys have questions over any of the homework, we'll go over that and we'll review. So we should have some time because since the test is kind of, you'll have a week, if you notice, almost a week, 6 days. So next week, your homework for all 3 chapters is technically due, but it'll be open until like the 23rd, so you can still finish it. But if you can get as much of it done, so when you come next Wednesday, you can ask me questions about the 3 chapters. That way I can answer questions before you test. And then the test is open, but of course you won't want to take it until after next week. So you'll have from the 18th through the 24th, so like 6 days. It'll be due Tuesday night. That way we'll have time to come in and start fresh that next Wednesday. So we'll be over 15, 16, 17. You'll take it at home on your own time or, in the LRC or wherever you want to take it. We'll talk about that next week as far as what to expect. But given that you're taking it at home, you can, and I encourage you to use notes, both the notes you've taken and the notes I've given you, and still review. But we'll talk about that more next week, just to kind of show where we're going. And so then after we've done that test, then the 25th, we'll move into the next chapter, the next unit, which this is the only one that we cover 3 chapters. So the next 3 units, we cover 2 chapters at a time. So it's a little less, and the reason for that is like 15 and 16, if you really go back and look at everything you learned, a lot of it's like overlapping and duplicate. So even though it's over 3 chapters, the concepts and what I really want you to know are really just 2 chapters worth, probably. So we'll review next week, though, for that. Go ahead, if you're out on Canvas, go into the Chapter 7 practice. Go ahead and load that. I will say out of the first 3 chapters, the Chapter 17 is a little trickier if you've looked at it, because we're moving into what we call process costing. So process costing, as opposed to job order processing. With process costing, we're looking at companies that produce pretty, uniform, equal goods. So, with job order, we were looking at highly customized, usually high dollar. You were going to trace the direct materials and labor and apply overhead to each job. With process costing, like we make pencils. So, all the costs are the same. So what we do is we actually divide the work in process into different departments. So you still have the same cost flows. You still start with materials and you still have a work in process. But depending on the product, you could have like 2 work in processes, 1 work in processes, 8. However, they split it out. So like for pencils, you could have like the first process was like shaving down the wood for the pencils, and then the next one was adding the coating, and then the third process was adding the eraser. So they're going to go to different stages in the work in process. So what gets tricky with process costing, because ultimately we just want to calculate like a unit cost, and then we would apply that, right? Sounds pretty easy. We just add up all our costs and divide by what we produced. Well, the tricky part is how do we figure out how much we produced in a period when we have materials and everything flowing through all these different work in processes and they're not completed. We have different stages of completion. So the tricky part in Chapter 17 is, first of all, we have to calculate what's called equivalent units of production. So we look at, say, in our first work in process, we look at how many materials and labor and overhead, how many costs were in there, right? Beginning costs plus everything we added. And then we look at what we transferred out. Well, those were 100% complete, right? Because they got transferred to the next process. But what about the ones ending? How many materials and labor and overhead did we add in this period, and how much came from last period? So we calculate the equivalent units of production. And all that means is, given all the costs that we put into this period, how much could we have completed based on what's left? So it's a little confusing, but we have to calculate equivalent units of production in order to establish a unit cost. So the whole purpose here is we calculate equivalent units of production, so then we can take all of our costs, divide by how many units we could have completed given all the costs we put in, and then we get a unit cost. that make sense? Not really. So again, what we do is we calculate equivalent units of production. So we look at all the costs that came in the period, and we said, well, if we had completed those 100%, we could have completed 500 pencils. But since they're not all completed 100%, we need to calculate how much was completed. So we may have only completed 60%, so we would take 500 pencils times 60%, for example. So it's just calculating, given the cost added in the period, what we could have finished. Okay? And that's important in establishing costs. So we calculate equivalent units of production first, and we need to do it in regards to both materials and conversion costs. Well, if you remember from chapter 15, we obviously know what materials are. Conversion cost is labor plus overhead. Okay? So we're just doing it for our product costs. So materials is separate. And then we do labor and overhead. We call it conversion costs. So we just add them together. Conversion costs are the costs it takes to take raw materials and convert them into real products. Okay? So that's what we're doing. So in your notes, I hopefully made sense when you look at them. What our end goal here is to assign costs for the period. So we're going to do what we call a cost of production report. And step one is determining the units that need to be assigned costs. So we're going to have three categories. We have beginning inventory, so what was already there. B, what started and completed. So any inventory that was started this period and completed needs to be assigned a cost. And then the ending inventory needs to be assigned a cost. So we determine that first. And then step two, we're going to calculate the equivalent units. And we use FIFO, if you remember, good old FIFO from College Accounting Procedures. It stands for first in, first out. So we use first in, first out method. And we're going to only look at examples where materials are added at the beginning of the process. So that'll make more sense as we go through. We'll talk about that when we get to it. Step three, we're going to calculate our cost per equivalent unit after we've calculated equivalent units. And then step four, we're going to allocate costs to the units that were transferred out of, whatever process, whatever account they were in. And we're going to allocate costs to ending work in process. Okay. So again, the end goal of this chapter is to be able to assign costs to completed units. Maybe they were completed in work in process and transferred to the next process. So we need to transfer that cost to the next process. Or maybe they're totally finished and ready to be sold. Okay, so we're calculating costs to assign to completed units. And then we also want to assign costs to those that are still in ending inventory. Okay. So the first practice problem that we have in chapter 17 is dealing with equivalent units. Because in order to do all the cost of production and assign costs and everything, you need to understand equivalent units of production. So again, the great thing in Cengage, if you mouse over it, it tells you. Maybe better than what I said. Equivalent units of production is the number of production units that could have been completed within a given accounting period, given the resources consumed. So again, given the materials and overhead and labor put in, equivalent units is how much that could have been completed. Okay. So here we have Hopkinsville Company, and we're looking at just their converting department. Converting department had 1,200 units in work in process at the beginning of the period, which were 25% complete. During the period, 16,000 units were completed and transferred to the packing department. There were 2,000 units in process at the end of the period, which were 40% complete. And then it tells us direct materials are placed in the process at the beginning of production. So again, what that means is when we use the FIFO, first in, first out method, under FIFO method, any beginning inventory costs that's already existing, those products that are already there, we're not going to consider those costs, okay? What we're going to look at is the cost it takes to finish beginning inventory. So it's a little bit trickier. FIFO method when we're calculating equivalent units of production. We're going to look at what's in beginning inventory and calculate how much it would take to complete. Okay? So also, we're going to break it into direct materials equivalent units and conversion. Okay? Another thing they told us, again, and this is going to be on your homework and tests across the board, is materials were added at the beginning of the process. Well, if materials were added at the beginning, then that means whatever's in materials at the beginning inventory, we already accounted for those costs last period. So we don't have to add in any materials in this period. Okay. So what I would start with, and they have it kind of done correctly down here, is we start with inventory and process beginning. And it asks for the whole units. Well, they gave us that, 1,200. We had 1,200 whole units in beginning work in process, both in regards to materials and conversion. Well, those have already been started. If materials are added at the beginning of the process, we don't need to add any more materials cost in this period. So the direct materials equivalent units is actually 0. Okay. So as far as materials go, whatever's in beginning inventory, and this will be the case on all the projects or problems, I'll spit it out eventually, all the problems that you work in Chapter 17, equivalent units for materials will always be 0 for beginning inventory. Okay? And again, that's because we're not considering costs from last period. With FIFO method, we're only considering this period's costs. And if we added materials, if those were in beginning work in process, that means the materials are already added in. So we have no additional costs associated with materials in the beginning inventory. Now, that's not true with conversion. Okay? With conversion, it said the beginning inventory, the 1,200, was 25% complete. So we've already added 25% labor and overhead costs. So what we do to calculate equivalent units is we figure out how much more would it take, how much more percentage does it take to complete it? Well, if it's 25%, it would take another 75%. Good. So on inventory and beginning process, my conversion equivalent units would be 75% at 1,200. So I need to add 75% more labor and overhead to make these completed. So in beginning process, you always consider how much labor and overhead would it take to finish these units. So 75% of 1,200 or 900 units. So that's the equivalent units that we would have in inventory and process beginning that we would need to complete. Okay. Started and completed, well, they gave us that. Or did they? They did not give us the started and completed. They gave us what was transferred. So they told us 16,000 was transferred to the packing department. Okay. Well, again, this is going back to like balancing T accounts, okay? But you're just trying to subtract. Because basically what you're saying is in this work in process, we started with 1,200. And we know we transferred out 16,000. Okay, we're transferred out. So then it's like, well, how many were started and completed? Well, we're just going to subtract. Okay. So we must have added in and actually completed, what, 14,800? Yes. Okay. So if they give you what was transferred, you'll just subtract out beginning process to get your started and completed. Beginning inventory plus what's started and completed always equals what was transferred out. Okay, that's when they say transferred out, that's what was finished. Well, if they were started in this period and completed in this period, then they're 100% complete, right? So the equivalent units for both materials and conversion for started and completed are always 100%. Okay. So if you're dealing with what was started and completed, they're always 100% equivalent units. So then, to go over transfer to packing department as far as equivalent units, then we had 14,800 materials and 15,700 conversion. So I just added those up. And then we also need to know what was in the ending inventory. Okay. Well, it tells us there were 2,000 units in process at the end of the period, which were 40% complete. So we had, 2,000. Well, here, if materials were all added at the beginning, then materials are added 100%. So those 2,000 that are in ending work in process are 100% complete in regards to materials. Okay, so that'll always be the case too. In ending inventory, materials will always be 100% complete because all the materials were added at the beginning of the process. So 100% complete for 2,000. And then it tells me conversion was 40% complete. So I would just take 40% of 2,000. Which you should get, what, 800? And then I would just add what was transferred plus what was in ending inventory. So I should get 18,000 total whole units. So now throughout this whole process, I should have 18,000 total units. Direct materials equivalent units would be 16,800, just those two added up. And conversion equivalent units would be 16,500. So 18,000 total units were started at some point. 16,000 were actually transferred out, and we have 2,000 left. Okay. So all total, we need to account for 18,000 units that were in the work in process. So when we look at equivalent units, direct materials equivalent units, we could have made 16,800, and given the labor and overhead we spent, we could have made 16,500.
Okay, so started and completed and ending inventory is always 100%. So you're basically just repeating your number until you get to the conversion.
Correct, yeah. For direct materials, you'll always have a 0 on finishing out your beginning. And then your ending will always be 100%. Yeah. Try to make it easy a little bit, right? Not till cost accounting where we have materials are not added at the beginning of the process to really like, ooh, that'll be fun, right? But yes, fortunately, direct materials equivalent units will always be 0 for beginning and always be 100% for ending. Yeah. And then conversion, again, for beginning process, you're going to take 100% minus whatever percent complete they are. And then for ending, it's just whatever percent complete they give you. So always what you think about with inventory is you want to think about how much more would it take to finish these. Okay, that's what you're doing. So you're basically taking out the costs that were already added. Any questions on that one? That's a big concept in this chapter, is calculating equivalent units. Okay. Well, the next one's actually a little bit easier. Kind of going back to last chapter, really. So here we're dealing with factory overhead, applying factory overhead, and then the actual account balance. So the good news is, remember in last chapter when we dealt with actual versus applied factory overhead? It's the same. So you're doing the same calculations, at least with factory overhead. So it's kind of a review. It's kind of nice. So on part A, we're just calculating a predetermined factory overhead rate based on direct labor. So Kenner Beverage estimated total factory overhead for blending department is $3 million, and total direct labor costs would be $2,400,000. And then they give us some actual costs. So does anyone remember what I do to calculate a predetermined overhead rate based on direct labor costs? Fun stuff, right? So for a predetermined overhead rate, you always take your total estimated overhead and divide it by your cost driver. So in this case, our total estimated overhead is $3 million. So we would take 3 million divided by our direct labor of 2.4 million. So what's the percent there? 125, good. So we are going to apply overhead at 125% of direct labor, okay? And again, the only difference with process costing is notice we're looking at just the blending department, so just one work in process account. We would have a different, possibly, overhead rate for like the next work in process account. That's really the only difference. But that was in chapter 16. So it says journalize the entry to apply overhead for May. Does anyone remember the journal entry to apply overhead? Well, how would I calculate how much overhead to apply? Any ideas? Well, factory overhead is 125% of direct labor cost. What's your direct labor cost? It says during May, the actual direct labor cost totaled $198,400. So I'm going to take that actual labor times 125%. Okay. So 198,400 times 125%, which is 248,000. Well, if you remember, when we apply factory overhead, we debit the work in process account, work in process blending, and we credit the factory overhead. Okay, so that's from chapter 16 notes. So we take direct labor at 198,400 times 125%. We debit work in process because that cost gets added into that department, and we credit factory overhead. Factory overhead gets credited for applied overhead. Well, then it asks, what's the balance of the factory overhead account? Well, they told me my actual costs were $253,200. So if you remember, for factory overhead, actual costs get debited. So you would have debited $253,200. And we credited applied at 248. What's my balance? Very good, 5,200. And would it go on the left or the right? Left, yeah. The left side's bigger, which is my actual. Okay. So the amount that I have in my factory overhead is 5,200, and that is a debit. Okay. It is a debit. So did we over or under apply overhead? Under. Very good. We under applied. We had more overhead than what we applied. The actual was greater, so we under applied the factory overhead. Okay. So that one's really kind of more of a review from chapter 16. But the purpose is that you can see the process is the same. The only thing is you're now just talking about just the blending department. That's the only difference. Everything else is exactly the same. Not too bad. You just have to review chapter 16, right? Any questions on that one? All right. The next one we're going to look at are the actual the flow of costs. So again, when we're looking at this, the difference now from job processing to job order costing to process costing is we have more than one work in process account. But you're still doing raw materials, work in process, finished goods, cost of goods sold. So your actual flow as we go through, it's the same accounts. You just might have several work in process accounts. So Domino Foods manufactures sugar products by a continuous process involving 3 production departments. So those are your work in process accounts: refining, sifting, and packing. Assume that records indicate that materials, labor, and applied overhead for the first department, refining, were $400,000, $150,000, and $100,000 respectively. Also, work in process in refining at the beginning totaled $40,000, and work in process at the ending of the period totaled $35,000. So that's a lot of talk, a lot of words. Again, when you get that kind of stuff, write it out on the T account. So we have the work in process for just refining. So the first thing I would do is I would look at, I had a beginning balance, 40,000. And then I added in direct materials of 400,000. I added in direct labor of 150,000. And I applied overhead of 100,000. And then they also told me my ending balance was 35,000. So that's what they gave me. That's the given. Well, if I write down what I know, then it makes it easier to come up with, what I don't know. So the first 3 journal entries are dealing with materials, labor, and overhead. Well, I just gave you half of it, right? You're debiting work in process refining for materials, labor, and overhead. So that's truly what we're doing. So for direct materials, we're debiting work in process refining. So again, this is the same as job order costing. We're just putting it into a specific work in process department. Well, what would I have credited? Where did those come from? What account would those have come from? What is it?
If it was sifting and not refining, right?
Mm-hmm. Yeah, this is our first work in process. Materials? Yeah, materials. You got it. Yeah, this is our first work in process account. So the materials came from the materials department. Okay. For direct labor, again, you're debiting your work in process for refining, 150,000. And just like in the last 2 chapters, you're going to credit wages payable because it's labor. So direct labor is going to be wages payable. And then the last one, you're still doing work in process refining for 100,000. 100,000. And what would I credit for applied overhead? You got it. Factory overhead for the refining department. Okay. So those cost flows, again, are really the same into that first work in process as they are under job order costing. The next one is when we take whatever costs were completed in refining and we transfer them to sifting. Well, I just need to calculate that, right?
Yeah.
So really what you would want to do, you're calculating what was transferred out. So you would take beginning plus materials plus labor plus overhead and subtract out your ending balance. Okay. So again, this is the same as what we did the last two chapters. You're just balancing the account. So you take beginning plus all three added costs, subtract out your ending balance, and how much was completed and transferred out.
$655.
Very good, 655,000. 655,000 was transferred to sifting. So what would I debit and credit?
You debit sifting.
Very good.
Work in process.
You got it. Yeah, work in process sifting gets debited.
For the work in process refining.
Work in process refining gets credited. So it's just flowing out of one work in process and flowing into the next. Any questions on that one? So it's just looking at job cost, the flow of the costs. Okay, so that's really pretty similar. We just, again, we might have multiple work in process accounts. Oops, I forgot a 5. There we go. All right. Well, the last one is our long one. This is one where we're actually doing the full cost of production report. So when we were looking at cost flows over there, that was looking at it as actual costs, which is easy to look at, but we have to calculate those costs. That's kind of our goal, is to calculate beginning inventory costs, what was added in, what we have in the ending, what was completed and transferred out. So if you kind of look at it, that's kind of your goal every time with process costing, is to calculate those costs. So they give us a lot of information, of course. We have the cutting department of Karachi Carpet Company gave us the following data for January. We are going to assume that all materials are added at the beginning. So our work in process, January 1, we had 1,400 units, and they were 75% completed. And they give us some costs there as well, like how they came up with the total cost. These are total costs, okay? And then they tell us what we're going to focus on first is units. So 1,400 units in beginning. We added more materials from weaving department, 58,000 units, and they give us the total cost. And then they give us the labor and overhead for January. What we don't know is goods finished and the costs, but we had 56,200 units finished, and we had 3,200 in ending work in process. So a lot of information. So let's break it down piece by piece. It wants us to prepare a full cost of production report. Well, if you look at your notes, that's like all 4 steps. We have to determine how many units to assign costs to. We have to calculate equivalent units of production, calculate costs for equivalent units, and then allocate costs. So that's what we're going to do all in this one problem. So the first thing is accounting for the actual units. So what units need to be assigned costs? Well, we need beginning inventory, which was what, 1,400 units. 1,400 units. So all total in this period, we had 1,400 units plus we received 58,000 from the weaving department. So I'd add in the 58,000 that we received. So all total in this period, we had 59,400 units. Right? 59,400 units. And if you look up here, of those 59,400 units, 56,200 were completed, and then we have 3,200 still in ending inventory. Okay? So one thing, sometimes when you're trying to do these and they give it to you differently, beginning plus added in, so the total units, should always equal what we finished plus what's left. Okay? So beginning inventory plus what was added in, our total units, would also equal what was finished and transferred out, plus what's ending, okay? Those equal up. They started as beginning inventory and materials added in, and they ended as what was completed and transferred out, plus what was an ending inventory, okay? So those two amounts equal. So we figured out we need to assign costs to, those were the total units. That's what we calculated there, the unit information. So the next one is we need to calculate equivalent units, okay? Well, again, we had in beginning inventory 1,400 units. Well, what is the equivalent units for materials? 0. Always 0 in the beginning because we added materials at the beginning. Let's see. They told us our beginning inventory was 75% complete. So how many conversion costs would I need to add? How many percent would it take to complete? 25%. Good. So for my beginning inventory, it would take 25% more labor and overhead to finish these off. So 1,400 times 25%. Very good, 350. So that's my equivalent units for materials and conversion for beginning. Okay. See, the next one is what was started and completed. Well, again, I don't think they actually gave us what was started and completed. They gave us what was transferred out, right? So we know we transferred out 56,200 units. 56,200 units were transferred out. So again, I'm going to take what was transferred minus beginning inventory to know what was started and completed. So started and completed was 54,800. 54,800. Well, if they were started and completed in January, all of those costs were in January. So they're 100% complete as far as materials and conversion. We need to account for 100% of those costs. So the equivalent units of production for started and completed is 54,800 for both materials and conversion. So then we just add for direct materials, the equivalent units for what was transferred out was 54,800. And then for conversion, it's 350 plus 54,800, or 55,150. And the last cost to assign are our ending inventory. Well, we had 3,200. They told us we had 3,200 units in ending inventory, 3,200. Again, materials are added at the beginning. So our equivalent units for materials would be the full 3,200 because all of those materials were added this period and they were added 100%. And then if I were to scroll up, it told me that these units were 30% complete. Well, for your ending inventory for conversion, you're just going to use that 30%. So 3,200 times 30%.
960.
Thank you. 960. So we need to add up our total units. Well, our total whole units, if I add those, 59,400. Notice that matches the total units to assign up here, the total units accounted for. So we know that we've gotten all the different categories. So these are all the ones that we need to assign costs to. This up here was just telling us how many units we needed to account for total. And this here are all the different areas in which we need to assign costs. We need to assign costs to beginning inventory, to what was transferred out, and what was an ending inventory. Well, what was beginning, started and completed, and what was an ending. And then for direct materials, to figure out my total equivalent units for January, should be 54,800 plus 3,200, or 58,000. And for conversion, 55,150 plus 960, 56,110. So 56,110. Okay. So any questions on equivalent units? Probably the trickier part there. Okay. So the next section is just dealing with the costs. So it says, what are the total costs for January in the cutting department? Well, I'd have to go up and look at my costs. And it tells me materials added during January was $742,400. So you don't have to calculate anything. That was all the material cost added, $742,400. Okay, $742,400. For materials, our total equivalent units we just calculated at 58,000 units. 58,000 units. We're going to take our total materials cost divided by our materials equivalent units to get a cost per equivalent unit. So you should get, what, $12.80 for materials? So our cost per equivalent unit for materials is $12.80. And then for conversion, well, remember conversion's labor plus overhead. So when I look at my actual costs, I would just want to add my $134,550 plus the $151,611. So what are my total conversion costs?
$286,161.
Very good, $286,161. And then again, I fill in I need to look at my total units, equivalent units for conversion, which was 56,110, 56,110. And then we just divide. And what do you get for your cost per equivalent unit for conversion costs?
$5.10.
$5.10. Very good. So that was step 3, right? So once we've done step 3, we have the cost per equivalent unit. Well, then we just need to assign costs. Okay. So it's not too bad from there. So there, for inventory in process of January 1, well, we know it's $12.80 for materials. Oh wait, they just gave me those costs. I'm sorry. So they give us the costs. So when we first start assigning costs, we know beginning work in process, the cost was $22,960. $22,960. Okay. That was my beginning. And then we also had an additional cost incurred in January. Where'd that just go? We would look at our total costs incurred. So we would add materials plus conversion. Okay, so our total cost incurred in January is materials plus conversion. So that would be $1,028,561. $1,028,561. So the total cost for the period would be $1,051,521. We just add those two together. So 1,051,521. Whew, fun, right? So that's the total cost accounted for by the cutting department. Well, then next we need to look at allocating costs to the different, beginning inventory, ending inventory, started and completed, all that fun stuff. Okay. So again, on the second little part, it says inventory in process January 1 balance. Well, that's the same 22,960. Okay, so we already had costs of 22,960 in beginning work in process. Well, on the next step, we need to figure out how much was it to complete inventory in process. Well, again, we just go back up to our equivalent units, and we had 0, if you remember, for direct materials, $0, because it was 0% to complete direct materials. And then it was what? We had 350, if I scroll back up here, inventory in process, we had 350 equivalent units for conversion. So you will take that 350 units times the $5.10 per unit. So 350 units at $5.10 a unit, and you should get $1,785. So the total cost to complete our work in process would be the $1,785. And then I just add to get my total beginning inventory cost. Okay, so that would be what, 24,745. So the balance plus what we added to complete those. So cost of completed January 1 work in process is 24,745. Okay. Then we'd want to look at the costs that were started and completed in January. Well, again, we would go back up, started and completed. Well, I had 54,800, right? 54,800 units for both my materials and conversion. So to figure out my materials cost, I would take 54,800 times $12.80. And what, 701,440. 701,440. And then I would take 54,800 units times $5.10. And I would get 279,480. 279,480. So this last part's really just a lot of math, right? And then I would add them together to get our total started and completed. $980,920. And so what we transferred to finished goods was everything that was completed in work in process plus started and completed. So I add those two together. $1,005,665. $1,005,665. Almost done, right? And last but not least, we want to figure out the costs that are still in ending work in process inventory. Well, we had, what, 3,200 units total. And as far as equivalent units, we need to account for all of those for materials. So 3,200 materials times 1280. So 40,960. 40,960. And for conversion, we had 960 units times $5.10. 960 times 510. 4,896. 4,896. I add those two together, and then my total ending work in process should be 45,856. $45,856. I add those two up, I should get $1,051,521. So notice that matches the cost that we accounted for in the period. So all total, we had a total beginning inventory plus all the costs that we knew we incurred in January, $1,051,521. Well, we just allocated those costs so we knew what to transfer to the next department, what stays in the cutting department. Okay, so all we did was took the total costs for the period and allocated them. So we know now that $1,005,665 was transferred to finished goods. So that would be a credit to this work in process cutting department. Okay, that's what was transferred out in costs. Well, it would have an ending balance still cost of $45,856 debit. Okay. So the whole purpose of this, it's a long road to get there, is we're really just taking all the costs in the period and determining what was transferred to the next department and what's still remaining in work in process. Okay. I know that's a lot. Are there any questions so far? So you always have to calculate your equivalent units first. And then once you get that and you calculate your materials and conversion costs per equivalent unit, then you're just applying those costs to what you've already calculated. Okay. So it's a lengthy process. It's a lot of math, but just follow those steps and hopefully you'll be okay. The last part, Part B, just wanted you to compute and evaluate the change in costs per equivalent unit for materials and conversion from the previous month. Well, the way we do that is we know our current costs are $12.80 for materials and $5.10 for conversion. That's January. If I were to scroll all the way up, this here that's in my work in process, these are December costs. Okay? So December, we were applying costs to materials at $12.65. Now we're applying costs at $12.80. So we increased costs, right, from December to January. So for materials went from $12.65 to $12.80. So on Part B there, you're actually increasing direct materials. Mine's not showing the last little part. Like it's cutting off the amount by 15 cents, right? Materials is increasing from $12.65 to $12.80, 15 cents. And then for conversion, December cost was $5, and now it's $5.10. So our conversion has increased by 10 cents. So costs increased from December to January. Okay, so we accounted for that. The good thing about using the FIFO method, the first in, first out, is that you're only applying costs incurred in this month. So your equivalent unit costs and your ending costs are more accurate than they would be if you were doing a weighted average, which they do that in the appendix in this chapter and we won't get into it. You'll do that in cost accounting if you're an accounting major. But any questions on 17?
I wish I almost had this printed out with the numbers and everything so I could just notate where we're.
You can print it. You should be able to print it completed.
Like it doesn't look like the attachment that you gave us. It's all wonky.
Yeah.
I gotta go through that too. That's all I need, Nagisa.